Good morning, traders. This is Barry Wilkie with StartupTrading.com. It is 5 minutes till 9 a.m. Eastern Time on Thursday, March 20th. So looking back, or not looking back, looking at what's left in the week, really we had, Bank of England was supposed to come out at 8. I'm sure they said something. The market seemed to not care at all. We had some minor news at 8:30. We're gonna have some minor news at 10 and 10:30. Then we're gonna have Bank of Canada governor on the mic, which should mean absolutely nothing at 12:50. So a lot of nothing is what it looks like on the tape today for scheduled news. Tomorrow is quad wedge expiration, right? So we're just kind of, reeling ourselves into that as the week goes on. Really nothing going on as far as news that's scheduled. Looking back at yesterday's session, the Qs basically traded between 475 and 485, settled around 480. Just as reference, they're trading 478 right now. Looking at the SPY, basically traded between 560 and 570, and they, just for reference, right now are trading 560, 460. And then the cash market basically closed traded between 5,600 and 5,700 yesterday. Uh, and if it were open right now, it'll be trading around 56.50. So kind of looking at where that put structure, right? We have some single prints on uh, about the middle of the session, pre and post FOMC. We have single prints on the Russell. We have splits on the other three, the NQ, the ES, and the Dow. The one for the ES is, a previous split that, still is the split, right at 57.25. For the Nasdaq, it's right at 19,935, and for the Dow, it's right around 42,300. So, looking at positioning real quick, uh, we're trading right around 56.50. If the cash market were to be open right now, you can see 5,600, 5,700. It's kind of your bands, unless things really change for the week, that we're going to get stuck in, more than likely. But I do want to, as I scroll this and make you dizzy, go down and just pay attention to this is really going into the end of the month on March 31st, Monday. This is really your bogey line in the cash market. SPX 55.65. You should really mark that on your SPX chart. That's going to be your, if the market does trade for some reason below there, it could be just a feed fest to the downside, right? The bulls would have to get it, back up above. It can also be a bounce point or kind of a draw. Um, but that we're not, that far from it. We're about, 85 points above this level on the ES right now. Uh, so, or actually, I'm sorry, because of rollover, we're much farther than that above. But we'll get those levels out here pretty soon. So I'm not going to go into the rest of it. If you look at really untested points of control, we have 56.70 half to the downside. Yesterday's was 57.30, and then we have 57.75 half to the upside. That is, basically in this 3-day range that we've traded recently. But if you look at the exact contract, you can see that we're really in an 8-day balance. You can forget about these lines that I have in here. You can just look at the high for the last 8 days and the low for the last 8 days and kind of do, a 61 to 78 to each side. And we're kind of, really muddling around in that zone for both of them. Uh, Looking at where we are right now, 77 and a half points in the overnight session, and you can see we've lost that 57.25. But what did we do? We just come back down and checked almost to the tick, 56.82 half. That was also the low of yesterday's FOMC, right? That's where we come down and checked into. So that's going to be, you got to figure, you got the stops from FOMC yesterday, you got the stops in the overnight. If we are going to take that level out, there should be plenty of stops down there underneath of it to drive it lower. And the next stop on the bus would be, 56.46 and 56.33 on the profile. However, holding above there, we could just, kind of dance and migrate between those until a decision is made. I'm not going to get into upside targets at this point in time. Uh, and then as we look at all the indexes, they're all in value or close to value area low at this point in time from the overnight session. So we're kind of coming back and checking those volume, right? Yesterday we come into the market, we had a classic bear trap, right? We had the previous day's volume was all on the lows. It was in a very tight range, and then what did the market do? It punished those traders almost the entire day yesterday. Didn't let them get their money back. But if you look at today now, it's potential that we're going to reverse that. And yesterday was a bull trap. So again, getting under these value area low for the Nasdaq at this in this previous split at 19,000. 784 basically, 783, wherever you want to do it, to yesterday's low. Uh, that's where the bears need to take it to start getting that drive and run all them stops below. And then for the ES, you really just, you can look at the overnight low and then yesterday's low. Those are the two areas that have the stops. I really don't have too much going into uh, that I'm going to pay attention to today, other than the levels that I've just gone over. Because as we go into OPEX tomorrow, and it's a quad witch, it's a big expiration, right? You got two big expirations coming up: the one tomorrow and the one on the 31st. Uh, so those two uh, are kind of going to drive the market for the time being. So you can really pay attention to, if you haven't been doing it already, pay attention to the VIX and the VXN as you're trading also, because those are going to be key as you hit these inflection points. If they're gaining traction or if they're just reversion to the mean. There's really no, I didn't look at next week's news yet, but I think we just have to get through this quad witch tomorrow. And to be honest with you, the pattern is, and I pointed this out below, that the cycle low uh, for the next several months will be made, uh, either today or tomorrow, and we're not close to the cycle low at this point, right? So it doesn't mean it's going to follow suit and it's going to do it exactly, but there's potential that we make a run towards that SPX 5565 and we take it out and go lower between today and tomorrow's close, right? That's really your inflection point. We could just get a test of that level and rip higher. Um, and of course, we might not get a test of that level at all. But we gotta see, basically, as Jack pointed out yesterday, the markets are, the closer you get to these major expirations, the more technical they get until the day of expiration. So this is our last day before the expiration for that one. So, we couldn't have, played these levels any better if we had a crystal ball that, where the magnet draws. So those are your levels. I've explained that there's a bunch of stops under these levels. We'll see if it's, always ask yourself, is it just a stop run or is it more? Right? So you'll know within an hour if it's just a stop run or if it's going to start accelerating after they trade. So getting back above these levels that are the overnight lows after a stop run this morning would be, I would consider, you know, potentially bullish action for a 2.5, 3 hour drive potentially, and then we'll have to see. Holding under those levels, those for more than 45 to 65 minutes should be resistance probably the majority of the session, maybe until the last little bit before the close, and we'll have to see. Uh, trade safe, use your stops, use your brackets. Again, volatility, although it hasn't been too much the last day or so, could revert back to as high as we saw on Tuesday. You guys have a great day. We'll see what Jack's looking at, and I'll talk to you tomorrow.